Hey, good morning, everybody, and welcome to this Tuesday, August. What do we got? August 12th. Wow, can't believe halfway through August already. Anyway, welcome to this Tuesday, August 12th, 2025 edition of Trading Places live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats. It's a pleasure to be with all of you again this morning. I don't know. Send out another invite to Fed Chief Powell. He's still late for the party. Inflation out this morning, pretty tame. Certainly not anything outrageous to the upside. I know the Fed continues to worry about tariffs and what impact that might be having, but I mean, we're now into that. This is the July CPI. We've been going through this now for about 6 months, and really not a whole lot to speak of. And yet we have jobs report that came out last week before, I should say, that was very weak, not just for this latest month, but then also revising jobs lower for the prior 2 months, quite a bit lower, wiping out almost all the jobs over the past 2 or 3 months. So I think we've got an environment where the market continues to expect that the Fed's going to lower. We do have the Fed on deck for, I think it's August. It should be the 22nd. It's always a Friday. So I think it'll be the 22nd from Jackson Hole. That'll be the Jackson Hole Symposium. Every year, the Fed chief speaks from Jackson Hole. And of course, there have been some famous ones, one being back in 2022 when Fed Chief Powell famously said more pain ahead after the S&P 500 had bottomed and risen 700 points. And not only did it give back those 700, but went down another 100 or two on top of that. So before bottoming again and moving back up. But he's no friend of mine as far as at least as far as the stock market goes and trying to call the stock market. But it is what it is, and it's one of the things that the stock market has to continue to deal with. As I point out here, or I will point out here in just a couple of minutes, money does continue to rotate into the market as if we're going to get rate cuts. So whether or not the Fed completely agrees with that assessment down the road or not, I guess we're going to find out. There are a number of folks, though, that are now starting to price in 3 rate cuts. We have 3 more meetings this year, and there are many who believe, I'm one of them. Of course, I believe they should have been cutting all along, but I certainly believe that they should cut the next 3 meetings. And I think there are a lot of folks, I think that is starting to grow in terms of popularity. Really, the only thing that hasn't really panned out, or I wouldn't say panned out, but doesn't seem to be setting up for lower rates is the small cap group, which continues to kind of baffle. I did see, well, let me go ahead. Let me get the futures up here for you. Just bear with me while I log in. All right, so let's see where we are right now. Start with the Dow Jones. And the diamonds right now up about 0.5% pre-market. Spider up about 0.4%. The QQQ up 0.5%. And the IWM up 1%. So the IWM is showing a little bit more strength. And we've seen a lot of this lately. I don't know if you've noticed. I'm updating our key manipulation spreadsheet, the one that I provide to our members each week. It's probably going to come out a little late. You might not even get one this week just because it's been so hectic with earnings season. I haven't been able to keep up with it. But I do know that when we look at the major, the ETFs that track our major indices, the Spider and the QQQ and the IWM, we've seen a lot of gap ups. In other words, the market hasn't really gone up. In fact, we've pulled back some. But if you look strictly at the opening bell, the market's been opening up, and we're about to do it again today. But we just haven't been able to follow through. And I think that's a sign, another one of those signs of a market that's just a little stretched, a little bit tired. You've got a lot of the Wall Street institutional investors taking profits and so forth. And we've got to get past that, I think, in order to really make another move to the upside. And I think it's probably going to take a little bit more consolidation before we get there. But let's go ahead and take a look at the action from yesterday and get this thing going here. So yesterday, and again, we started off pretty good yesterday. The Dow Jones Industrial Average, though, finished down almost a 0.5%, down 200 points. S&P 500 down 16. So remember, we got within, it was less than 1 point of an all-time closing high on the S&P 500 when we were at 63.8945. That was the close on Friday of last week. We opened up on Monday, but then finished down 16 points. The NASDAQ, same thing. We had a really nice move to the upside, got a gap up, and then saw some early buying. It looked like the market was ready to take off. And then probably around 10 or 10:30 Eastern, the selling kicked in again, and we saw mostly selling throughout the day. So we've seen maybe 3 or 4 of these types of days where we've had some real strength going in the morning early on with gap ups and a little bit of push to the upside. And then we just see some distribution throughout the day. And I think some of that is just old-fashioned profit taking. You got, a market that's gone up quite a bit off that April low. I can't blame anybody for taking profits. I've been doing it. I think probably makes sense to raise a little cash and see what happens during the balance of August and into September, which historically are a couple of rough months. The S&P 100, you can see down 0.25% as well. So that's focusing on more of the large cap names there. S&P 400 mid cap down about 0.4%. The S&P 600 small cap down a little bit less, down about 0.1%, just slightly more than that. The VIX continues to drift, in my opinion, lower. It did rise yesterday with some of that selling, up 7%, back up over 16. But I suspect once we get past any consolidation or selling that we might see in August and maybe even September, I think once we get past this period, I would not be surprised to see the VIX in the fourth quarter down around 11 or 12. I think the market's going to move higher. I think the volatility comes completely out of the market. I think we're going to have rate cuts. I think you're going to see economic growth. And I think all of that together is going to get rid of a lot of the fear that still exists out there. Moving on to the sectors, just wanted to show you yesterday, communication services, consumer discretionary, the 2 groups leading the market to the upside. There were only 3 groups that finished in higher territory. The other one was healthcare, rising about 0.1%. Consumer discretionary, no doubt, got a lift from Tesla. Tesla's been on a little bit of a roll these last few days, so Tesla moving up's helped that group. Many of the internet stocks continue to hold up well, perform well, and that's certainly helping communication services. But beyond healthcare, you've got financial services, another area that's maybe a little bit more value oriented, but still has kind of an aggressive flavor to it. Tends to do well when the market is in an aggressive mood, when market participants are in an aggressive mood. Then you got the other half of the consumer stocks. I always like to see consumer stocks doing well because that anticipates, in my opinion, a strong or a strengthening economy. So we've seen that recently a little bit more of late, where consumer stocks have been in the top half of the sector performers. And we saw that again yesterday. If there was a downside to the market, it was probably technology. I know semiconductors were up really nicely early, and then they sold off during the balance of the day. And that certainly weighed a little bit on that technology group. But overall, if we go back really like the last 3 months, you can see technology, communication services, consumer discretionary, industrials. Those are 4 of the 5 aggressive groups that we like to follow. That's what's been leading this push to the upside. There's no bailing and moving into defensive groups or value-oriented areas. This move to the upside is being fueled by areas that we want to see it being fueled by. This is an aggressive move to the upside. It is a risk-on environment, and that, in my opinion, bodes well for down the road. Doesn't mean we're not going to have a pullback. Doesn't mean we won't consolidate. Doesn't mean things might not get scary again for a period of time. I mean, it doesn't take a whole lot to get everybody in an uproar. But I just don't see a big drop coming. I mean, if you're waiting for another 10% correction, I don't think you're going to see it in 2025, even with August and September. I just don't see it. I just don't see the kind of preparation. I don't see any movement, any kind of rotation that would suggest that we're going to have that deep of a sell-off. I've said before, I think 3 to 5%, possibly a little bit more than 5%. Maybe we get back to 6,000, but that would kind of be worst case. I would still continue to look maybe at that 61.44. Remember, that was the high back in February before we went into the cyclical bear market. We came back out. We went through that level. And remember, technical analysis 101, broken price resistance becomes price support. So 61.44 was that prior resistance. We broke through it. We have not gone back and tested it yet. So if we do, I would suspect there's going to be some buyers at that level. So that would be, if I had to pinpoint the area that I think holds, if we do run into some weakness, I think it's going to be that 61.44 level. All right, S&P 500, you can see a little bit of the reversal. We tried to get back up, tried to get through the levels, the high levels that we saw at the end of July, which was above 6,400. Couldn't quite do it. We hit 64.07 yesterday intraday, but we finished at 63.73, down closer to the low of the day. And what I was referring to, let me show you this growth, some of these growth versus value ratios. So here's the S&P 500. This is the QQQ versus the spider. So the QQQ, a lot of the same stocks are in both. Of course, the NASDAQ 100 only has 100 stocks. The S&P 500 has 500 stocks. And the NASDAQ doesn't have nearly as many of what I would say are value-oriented stocks. Most of what you see on the NASDAQ 100 is growth, pure growth. So it's not that the S&P 500 is a value index, because it's got plenty of growth names, and many of the highest weighted companies in the S&P 500 are growth names. The technology group, the technology sector, represents 33% of the S&P 500. So to say that it's a value-oriented index would be a mistake. But it is more value-oriented than the NASDAQ 100. So by looking at this ratio, it just gives you a sense of whether the more growth-oriented NASDAQ is leading, or the more value-oriented S&P 500, or the less growth-oriented, if you want to state it that way. Anyhow, you look at what's going on. QQQ outperforming the S&P 500. I think that's pretty important. Discretionary, not exactly flying at this point, but we did bottom back in April, and we have been in an uptrend. The Russell 1000 growth versus value. This is large cap growth versus large cap value. Look at what growth is doing here. When we topped in February back here, look at what was going on in growth versus value. Money was rotating away from growth and into value. We're not seeing that. So if you're expecting that Wall Street is somehow banking profits, moving into defensive groups ahead of some sort of a big drop, you're going to have to show me those charts, because I'm not seeing it. Money continues to rotate into growth, and that's bullish. Same thing here. It's another large cap growth versus value index, but you can see pretty much same thing moving up. Then we've got mid cap growth versus mid cap value. Pulled back a little bit here in August, but still in a nice uptrend. And then small cap growth versus small cap value. You can see just sideways consolidating. So we haven't had quite the same excitement in those small cap growth names as we have in mid caps, and especially large caps, but we're not going down. All of these ratios are moving up or consolidating their gains right now. That all is bullish in my mind. All right, NASDAQ 100. NASDAQ 100 did break out to a new all-time high yesterday, but as I mentioned, we reversed. So if we go into the intraday, you can see early in the day, and actually it was around noon when we topped. I thought it was a little bit earlier in the session, but we topped around noon, and then all afternoon we saw selling. Remember the gap up that we saw last Thursday, and then selling throughout most of the day. How about if we go back 10 days, we can see that day. Remember when Meta and Microsoft came out with their good news? That was on a Wednesday evening. This was Thursday morning. The next morning, big gap up, selling. Next day, selling. We've come back up. Here was a gap 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 up. We're mostly moving back up on gaps, not necessarily on buying. So I'm not sure, the way it looks to me is like it's just a tired advance. I don't know how else to explain it. But in August and September, that makes me a little nervous. I mean, we got some good news today in terms of the inflation numbers. I think the headline number came out a little bit better than expected. CPI at the core level was about as expected. And that was pretty good news. Right now, we've got the IWM up $1.71, which is up to about 222. That's up a little more than 0.75%. But again, it's another gap. So if we pull that chart up, let's take a look at the IWM. And you can see it's just kind of these last 5 days, not really able to sustain anything. Let me shorten this chart down. Let's just look at the last 3 months. But right here, see what I'm talking about? So here was a gap up, couldn't go anywhere. Here was a little bit of a gap up, couldn't go anywhere. Here was a gap up, we sold. Here was a gap up, we sold. Here was a little bit of a gap up yesterday, and we came back down. It's just, we're not able to sustain anything. Now we got another gap up potentially today to about this right now it's 221.98, and we got probably about 12, 13 minutes to go to the opening bell. So the question is, can we make this push to get up to and through 226? Can we do it in August and September? Don't know. Going to find out. I mean, I'm not bearish. I am definitely not bearish. Hopefully you can tell from everything I've talked about, I'm very bullish. I'm just cautious in the near term because we've run so much, because it does look like a tired advance. I mean, during the move up to the upside, look at all these hollow candles in the IWM. That to me is indicative of a lot of accumulation during the day. It's not just market makers getting everybody excited at the open, only to see a lot of churning or even selling during the day. That was buying. There was a lot of hollow candles. And if you look since the recent top, here was one pretty good hollow candle coming off that recent low to start August. But outside of that, we've had either red filled candles or really small candle bodies where the open and close is almost identical. So again, we're not falling apart, but it's not like that we're seeing a whole lot of accumulation at this point. It's just a tired period of consolidation on the IWM. Now the QQQ, if we look at this on a 3-month chart, again, you can see a lot more hollow candles. Recently, we've had a few. So we have seen a little bit more intraday buying on the QQQ, but still unable to make this breakout. Looked like we were going to do it yesterday. Looked like we might do it on Friday. Didn't do it either day. And like I said, reversed yesterday. Now we're going to give it another shot. So right now the QQQ pre-market is sitting at 575.36. Yesterday's open was 574.69. So right now it looks like we're opening at a new candle body high. Let's see what this was back here. This was 574.54. Yesterday's close was 574.55. Yesterday's open was 574.69. So nothing over 575. Right now, we're at 575.36. So at least for now, and we'll have to see in 10, 12 minutes, do we continue to hold that into the open? 575.34 right now with 11 minutes to go. We could have a new candle body high, all-time candle body high on the QQQ. We'll go from there. Later today, I want to let everybody know, later today, we are going to be doing a Max Pain event. It will start at 4:05 p.m. later today. So right after the market closes. This is always an interesting week for us at Earnings Beats for a couple of reasons. Number one, it's a monthly options expiration week. So this is when, if you're holding on to August monthly options, this is your last chance to sell this week. At the end of the week, you either have to exercise if you're in the money, or if you're outside the money, unfortunately, then your options will expire worthless. But this is going to be the week where you have to figure out one way or the other what you're going to do with your options. Now, the interesting part is that the history of the stock market is that we tend to go up more than we go down. So the history going into option expiration week is that normally the market goes up, which is kind of where we are right now. We're near the all-time highs, especially on growth areas where we see a lot of option activity. So the fact that the NASDAQ's up near an all-time high and might even open at one today tells you that there's probably a lot of in-the-money call interest out there, which can be problematic because market makers are on the other side of those trades. Anyway, I'm not going to spend a lot of time right now talking about it, but it does create issues. And the other thing, in addition to it being option expiration week, we have history, going back, looking at the stock market and how it trades throughout the calendar month. We know that going from about the 17th, 18th, 19th of the month on all the way up until about the 24th of the month tends to be the worst period for stocks. Now, this particular option period, the August options, this is the earliest that option expiration will ever fall. When Friday, it's the third Friday of every month. So when Friday is the first day of the month, which it was for August of 2025, that means the third Friday is going to be the 15th, which is what it is this week. So the third Friday always falls from the 15th to the 21st. No exceptions. That's when the Fridays are going to fall. So this is a little bit earlier, but the impact tends to still be very similar. And that is as you get closer to option expiration and as you go into the week following option expiration, the tendency for the stock market is to weaken. Tendency, not guarantee, tendency. So that is another reason why I'm a little bit nervous going into this week. And I always am. Every time we go into option expiration week and the week following, I tend to be much more cautious just because I know history. I can tell you that the Monday that follows option expiration Friday historically is the worst day to be invested in the stock market. The Monday that follows Friday option expiration. So that would be this upcoming Monday. So we got option expiration week, and then we start the week following, which again, the beginning of that week can be a little rough as well. I'll talk about that more at 4:05, and I'll give you some stocks that you better be really careful with because these stocks have a lot of net in the money call premium, and they could be set up for a swift, again, not a guarantee, but they could be set up for a swift correction or drop. We've seen it plenty of times before, and you'll want to know what those stocks are. So make sure you join us at 4:05. One way you can do that, by the way, is if you scroll down at our website, just sign up for our EB Digest. It's our free newsletter. Later this afternoon, we're going to reach out to everyone on that list, and we're going to send them instructions to how to join us this afternoon for this free broadcast. So make sure you sign up if you haven't already for our Earnings Beats Digest. Name, email address, that's it. No credit card required. If you would like to try our service, you can do so by clicking on that Start Your No Cost 30-day trial. That does require a credit card, but we will not charge you until after your trial period is up, and we will reach out and let you know. We will remind you that you're going to be charged, and not only remind you that you're going to be charged, but we'll give you a deal to try to see if you are interested in an annual membership to save you some money. Anyhow, beyond that, I tell you what I'm going to do now. We got probably about 6-7 minutes left here. We could just leave early, but we don't want to do that. So let's go ahead. I want to show you, I talked to you earlier about Tesla, the fact that it's been making a move. It's actually at about a 6-7 week high. It went through 340 yesterday, closed at 339.03. Got as high as 346.64, but you can see the last 4 or 5 trading days, it's made a run from about 300 up to this 340 level. So that's about a 13% move over the last week or so. So Tesla having a really good stretch. Amazon, which had gapped down after earnings, has come back, but look at it squeezing between its two moving averages, trying to see which way we go here on Amazon. But those are the two stocks that really drive the XLY. Consumer discretionary, two massive companies, Amazon and Tesla. And whether or not Tesla continues its move to the upside and whether or not Amazon can get back through its 20-day moving average. Those are going to be the two factors on whether the consumer discretionary, the XLY, which I talked about earlier, it's moving back up again. But again, a lot of it has to do with the reaction back to the upside on Amazon, and then the strength we've seen in Tesla. But look, we're right up against a key resistance level near about 226 or so on the XLY. So the question is, can we get through that level? Well, look, follow Amazon, follow Tesla, because you're probably going to find the answer there. All right, a couple of our chart lists. We did, for our Earnings Beats members, we did set up, and I think they've been updated on the website. I'll double check on that to make sure that you can grab a copy. But the new strong earnings chart list for August 8th for last week has been done, and it is now available for everyone to download into your account if you're also a Stock Charts member. If you're not a Stock Charts member, you can still download all the symbols into your own trading platform. So, make sure you understand that. But I always like to go in here and look at the summary and just see what was working yesterday. So let's take a look on here. Soundhound, SOUN, that's a very heavily shorted stock, by the way. That stock was up 17% yesterday, made a big move. We can pull the chart up, take a quick look here. It made the breakout 2 days ago, and then yesterday, or Friday actually, and then yesterday just took off. It is likely being benefited there by a short squeeze, because as I mentioned, there are a lot of shorts on this stock. Anybody who shorted this stock over the last 6 months or so now underwater. And when you see, when you are shorting a stock, essentially you've already sold it. Now you have to buy it back. The problem is the buy price could go up through the roof. You have no idea how high it can go. So literally, when you're shorting a stock, you have unlimited loss potential. So if you're sitting here and you've sold this stock and now you have to buy it back at some point, let's say you sold it at 9. Now you got to buy it back at 16. If you shorted 1,000 shares, you're down $7,000 right now. And what if Sound opens up at 18 today? I haven't even looked, but let's see what it's doing today. Oh, down 7 cents right now. So far, a little bit of a reprieve. I wouldn't be surprised, though, to see another run in the stock when you've got this kind of a setup where you're now trading at a multi-month high and you've got a lot of short interest. Any kind of another breakout above yesterday's high is going to encourage more and more and more buyers into the stock. You're not just getting technical buyers that are seeing the breakout. You're seeing panicked shorts that are going to have to cover in order to limit their losses. So anyway, a stock like SOUN can be really exciting in the near term. And the way I can kind of look at it and confirm it's a short squeeze is by looking at the volume. The volume is massive. So I don't think this is just a few technical buyers coming in. I think this is a lot of folks that have been betting against the stock that now have to come back and pay a lot more for it because of the breakout and the heavy gains the last couple of days. All right, AVAH. I know over the last week or so, this has been a really strong performer. You can see a huge breakout here on the stock. This is, again, these are stocks on our strong earnings chart list. These are stocks that are showing a lot more fundamental strength. And so when you start to see technical strength to go with it, you can see some of these kinds of gains. There's no doubt. OUST is one that I've always, I've been talking about recently. I really like the stock. We got the gap up, had a false breakout, came back down. I think we're going to get ultimately a breakout there. I think we've now filled the cup to the right side. We need to get a breakout and a close above about 31 or 32. And I'll tell you what, I'm going to do one more, and then we're going to wrap this thing up. Lemonade. This is an AI stock in the insurance space. And I noticed yesterday it closed at a new 52. I think that's the highest close. I don't know if it's an all-time. Let's pull this up. Nope, nowhere close to an all-time. This stock, you think, looks like got up to about $190. But at least over the last few years, it does look like it is closed at a new high. So this is a stock maybe that takes off with a breakout. It's got to get, I guess, technically needs to get through 54 to take out that intraday high that we saw about 7 or 8 months ago. But definitely a lot of strength here. and a lot of volume. And this is another stock that is fairly heavily shorted as well. So we might be seeing a little bit of a short squeeze here. All right, it is 9:30. So let's go back and just check, see what the market is doing here. Early action looks like the Dow Jones up 190 points, 0.4%, which is what we were looking at earlier. We've got small caps up about 0.75%. So it looks like everything's opening about as we talked about. Let me give you that QQQ open, see if we got over that 575 level. And we did. We opened at 575.13. And right now we are sitting at 575.37. Small caps, big gap up there near 222, selling off a little bit since the open. That's been the process here. As you can see, the selling pick up a little bit. Maybe we'll change. Maybe we'll have a different kind of a day, but at least starting out looks very similar. Gap up, and so far a little bit of weakness after the open. Anyhow, that's it for me. Remember, 4 o'clock today, 4:05, we're having that special event on Max Payne. If you want to learn more about the impact that monthly options have on the stock market, you don't want to miss this event. So make sure that you go over to earningsbeats.com, scroll down, sign up there for our Earnings Beats Digest newsletter. It's free, and we will send you room instructions. Members, we will send you room instructions later this afternoon. So you should be all set, ready to go. If you like the video here at Earnings Beats, if you like our videos, make sure you hit that like button and also subscribe to the channel. We'd love to have you support our community in that way. And we certainly enjoy being part of this and bringing this to you as often as we do. Anyway, everyone have a great rest of your day. Get ready for that event at 4:05. Hopefully I'll see you there. Happy trading.